Hi guys, welcome back to my channel. This is Mimi Forex here again, and sorry people that have messaged me concerning my Instagram. I don't really know what happened. My Instagram is totally down right now, and this is actually not the first time. The last time it happened, Instagram just logged me out from it, as in they just logged me out from Instagram, and I don't really know what happened. Then after a day or two, Instagram sent me a mail saying my account was mistakenly disabled, that I can now access the account. But this is now over 4 days. I'm still waiting for that mail, for Instagram to send me that mail so I can regain my account back, but I haven't gotten the mail yet. So if that mail didn't come, I'm going to open another Instagram account, right? And I will send you the link here, and I'll make sure the security is very tight there so that this will not happen again. So I will make the account available here on Instagram or on YouTube. But if you want to reach out to me, I'm going to drop my number on the description box. So please, if you are new to this channel, kindly sit back, watch the total video. If it's something you like and you want to keep getting this kind of content, do well to like the video, subscribe, and turn on your bell notification, because once I drop video like this, you get notified. You can comment below anything you feel like I could do better, and we are all here to grow, right? So this is a quick video how to make money from synthetic indices, how not to miss up on trade, because the fact is that trading can be very confusing. Trading can be very confusing in a particular time frame, probably the monthly or the daily or whatever it is. You might, okay, let me give you an instance. Now this is like if I should draw my trend line here now, let me give you an instance. If I should draw my trend line from first, drawing it this way, you can see this is a total break of trend line. This is a total break of the trend line. Now what you might be looking out for now is, okay, probably the market will now retrace back, something using the Fibonacci retracement. The market will now retrace back to this zone, right? From some retrace back to this somewhere about here, then you are entering for a buy, targeting to the upside, right? Now that is for buying scene. Now somebody might come and that is what the person sees. The person is seeing what? Buying opportunity. Now another person will come into the market, and now what is the person saying? The person is saying that, wow, this is the market is massively selling. What the person do? The person will draw it from swing high to probably swing low, and you can see now that the market is at 50 Fibonacci retracement. The person is now looking to go short. Do you understand? But this is very okay, because this is the only reason why you can place a buy or a sell, and the market will be placed successfully, because the moment you place a buy, there is somebody somewhere else that is clicking a sell, so they are interchanging it, right? So now, but the thing is that the moment you place a trade, and one person has to win, the other person will be winning while the other person will be losing. So now the only reason, this is where it gets confusing. Now what will you do to be on the winning side? What will you do to be on, because right now I just showed you a buying signal and a selling signal just using Fibonacci retracement. If I should look closely, you are going to be seeing something like a rising channel and an inverted head and shoulder. This is a rising channel is a selling opportunity, and a head and shoulder is a buying, sorry, a rising channel here is a selling opportunity, and an inverted head and shoulder is a buying opportunity. So which one are you going to stick to? This is where it gets really confusing. But right now I want to teach you a secret on what I've been using so far. Now I have different concepts of how I trade now, but I narrow them to just one strategy, to just one trading plan. There is a methodology I use in trading either forex, stock, and whichever it is, which is what psychological level. Now I'm not going to be talking about psychological level in this video, but psychological level is a key of my trading, because it helps me answer a lot of questions. There is different ways people plot psychological levels. Don't get me wrong, there are different ways. When you say someone should plot psychological level, or people, you see someone's chart, you'll be seeing different psychological level patterns. Some you see them in difference of 10 or maybe 100 pips, like 100, 200, 300, 400, 500, 600, 800. Some will become it narrow, give it more detail, giving just 50 pips, like 100, 150, 200, 250, and thereabout. Now I plot psychological level in a different perspective altogether, but psychological help me to guide me through the chart, to tell me where the market is heading to. Once the market approach the next psychological level, I am not waiting to see where the market will go to, either to break up or retrace below, because most times the market will go and close below the psychological level, doing a double bottom below the psychological level, but that will now that be doing a double bottom below the psychological level, and what you see next is a pump to the upside. But now the center, the place that is doing completing the second W, right, this place that is completing the second W might be touching the psychological level. Now you now might be thinking that is a break on psychological level and a retest. So now, but I have already foreseen before the market got to that psychological level that the market is going to get to that psychological line and retrace. But you now on that end, you are just waiting to see a direction of the market. Now you might be right using other confluences to add it, now guide you and maybe make you escape that mistake. But this is a plus psychological level in an other perspective, and this is what I basically use. But in this video, I will not be talking of psychological. I've talked about psychological level in my previous video, but I didn't give details on how I did it because of something. If you're interested to know how I plot psychological level, I'm going to drop my number in the description box. You can do where to reach out to me. But in this video, I'm going to teach you a simple technique on how to get trades, like how to get reversals very easy, because I'm a person that trade reversal. I trade with both continuation or trend, but I trade mostly reversal just to get the reversal, because that's where the money lies, because that's where the momentum candle comes. So now I'm just going to go ahead to delete this guy. So how will I trade? Now what I want you to do, once you go to your chart, this is how to get trade almost every day and get at least 9 or 8 times win, right? 9 or 8 times in a 10 trade, you are going to win at least 9 or 8 times. I'm very sure. I'm going to tell you the fact. Now what are you going to do once you get to your chart? Now just go to the daily time frame. Pay close attention, please. Once you go to the daily time frame, just identify the trend. I'm coming with the analogy that the trend is your friend. The trend is your friend. Go to the daily time frame. Once you go to the daily time frame, identify the trend. What trend are you seeing? I don't want you to go back and start looking and looking and looking, trying to join all concepts together. Just wherever you are, just stay there and now identify the trend. What can you see basically? Now I can see that this market is basically in a downtrend. I'm not minding if this particular place have come to test an order block or anything. I'm just looking at the current trend. Now this is the current trend. So what am I looking? The market is in a downtrend, right? The market is in a downtrend. So now what will I do? I will just go ahead to plot all my points of interest, all the points of interest I know. Now points of interest can be through the third touch of the trend line. That's if I should draw my trend line from swing high, swing, like first touch, maybe probably second touch, the third touch I'll be waiting for with my point of interest. A resistance, now this is the downtrend, so a support now is a point of interest because it will tend to act as resistance in the future for the market to go down. Order block, where the market was an order block before, is a point of interest. Now this pattern, I love seeing this pattern. I've seen this pattern a lot in the market, where the market wants to break a resistance or a demand zone. It will break it, give it a small retest before going down. Then the market will now come back whole to that same zone with giving another retest to go to the downside, right? I've seen this pattern a lot in the market. So this is also another point of interest. The whole of this candle is an order block for me, because this is another block for me and it's also a support in this place. So I'm just going to mark my point of interest. So now all these point of interest, don't get scared. How are you going to know which one is going to work out? Sorry to say, this is not the tool I want to pick. Okay, let's go with this guy. So I will just mark it out from here. Yeah, so I'll copy and I'll mark it out from here. This is my point of interest. I'm picking the whole of that other block. Now you can also get your point of interest using Fibonacci retracement, like I've shown you before earlier on. Sorry, I shown you this is a point of interest. Now you can see it in between the 50 and the 61 point what is that, 61.8 is my order block. So now you've seen the market has break through the first point of interest. Now at the second one, so I will just go ahead to use this guy as my next point of interest. So in between the 50 and the 61 is my point of interest. Very good. So I'll just go ahead and watch this guy. So now this is how you get your point of interest. Either you'll be looking at the third touch of the trend line. Once the market is ascending the third touch of the trend line or descending to meet the third touch of the trend line, that is your point of interest. Those are point of interest that the market, that's a point, a potential, very good, that's a potential point of reversal, right? Because now we are here to catch the reversal. So those are potential point of reversal. So now how will you know? Because if you go ahead and keep searching, if you go ahead to use Fibonacci retracement at this point, you get the potential point of interest. Let's go to swing high and swing low from here. You're going to see, you can see it right here, in between the 50 and the 61.8 is your potential point of interest. Let me get it well. Now, very good. In between the 50 and the 61.8 is your potential point of interest. And where is your take profit? You don't have to be greedy with the market. This is your take profit. You can see the next high, and you can see where I have that, the next line right there. That's my X4. That's times 4. So if you are risking 20 pips right here, you are getting times 4 of it. You are risking 50 pips right here, you are getting times 4 of it. Because that is how I calculate the stop loss. So it's just accurate of times 4 of whatever I'm risking here. So now where the question lies is now, how will you get your confirmation entry? Because now every point of interest, I won't just go and place buy stop or sell stop or buy limit or sell limit at those places. What I will do is that once the market gets to that point of interest, I will go down to lower time frame. This is daily, where I mostly take my entries are 1 hour, but I'll step down to 4 hours or 1 hour time frame. Mostly, somehow, if I want to purify the trade to get a sniper shot, I'll go to 30 minutes time frame. I will go there, then apply the confirmation entry. The confirmation entry is just a confirmation of reversal that truly, yes, this market is about to reverse. This market is about to reverse. That is what I will just do. So once the market gets to a point of interest and I see some consolidation, which will get many other traders to get involved, to get emotionally and place trade. I want to make this video quick short. To get emotional and click the trade, what I will do is to go down to lower time frame and now apply the confirmation entry, which is until A, B, C happens before I will do D. Until A happens, B happens, D happens, then I will go ahead to do my D. Do you understand? Most times the market will complete the A, B, but it won't happen, the C won't happen. So you will notice that once the A, B happens, B happens, I'm waiting for C for me to get enter, the market will just blow off. Most times it just happen, just A will happen, B will not happen, the market will blow off. But imagine if I'm just placing a sell just based on consolidation. Now there are other ways I also place trades apart from, because now I place the A, B, C, D confirmation entry only if the market is ascending in a particular pattern. But if the market didn't ascend in a particular pattern, I have another confirmation entry just with candlestick rejection. There are candlesticks pattern which I kind of look out for before I place a trade. Right? So now I know most people will be like, how are we sure that what you are saying? I want to make this video quite short. How are we sure that what you are saying is correct? How are we sure that this particular strategy you are saying you can get trade, you can get reversal with just looking at the daily time frame and what's really happening, plotting your psychological level? Don't worry, I'm going to show you proof right here. So I have trades running right here. So I have jump 50 running in the background. I have jump, you can see it right here with your eyes. I have jump 50 running in the background. You can see my stop loss is below. This is jump 50 running with the same strategy, right? With the same strategy, you can see the pattern, you can see the market running in the same direction, right? You can see the market running with the same strategy I just said. With the same strategy I just said, you can see the first entry is here. You can see at the wick of this candle, that's where I got in. The second one here, you can see I've already break even on this trade. Now I'm going to show you the next trade I am on. I think that's about jump 10 or so. Okay, are you sure it's jump 10? I don't think jump 10. Let's see. I don't know what trade is that again. So let's go, let's check. Is it boom 300? I don't know. Let's check. Yeah, that's boom 300. You can see the trade I'm already on this trade. I think that was boom 500 also. I think that's boom 500. Let's see. You can see also I'm also on this trade. I have broken even on the trade, the both all of the trade. Now this is a very easy concept. It's a very easy concept. The strategy is very easy, just daily time frame plus. So now if you want to learn how I trade properly, if you want to learn how I trade properly, my number is going to be in the description box. You can do it to reach out to me. I will teach you how I trade from the psychological level all the way to getting a simple technique entry, right? You can always get entry with different concepts which I will display to you, I will reveal to you. But if you know how to get in, if your entries and your exit strategy are okay with this only simple strategy, you are going to be killing the market. Not only synthetic, it goes on currency pairs, on stocks. As long as you know the direction of the market on the daily time frame, you don't need to stress yourself going much further. Except you're a swing trader like I am, you can start from the monthly and do the same concept. What is the monthly saying, then you go back, what is the weekly saying, the daily saying, you strike your entry on the 4 hour, more confident with your trade, right? So I just want to make this video quite short. I just want to let me show you something real quick. Yeah, so these are all the trades, right? These are all the trades. You can see these are all the trades. It's just running, it's just running. You can see it, they are really, this is boom 300, this is the lowest lot size. Jump 50, this is almost the lowest lot size. 0.01 is the lowest lot size. So you can see, you will notice people using 0.1 or 1 lot size on jump, hitting a lot of people. So if I should if I should use 2 lot size on this is a 1007 on jump 50. If I use 0.2, this is $170, but this is almost the lowest lot size. The lowest lot size on jump 50 is 0.01. So imagine $17, just killing the market like this. So if you are interested in the market, if you are interested to trade how I trade, my number is in the description box and do it to reach out to me. See you in my next video, and thank you for watching. I'm going to drop my Instagram handle once I don't get the email from Instagram to get access to my account. I'm going to drop my description, the next account, the username of the account. I'm just kind of rushing, I'm very sorry. I'm going to drop the name of the account in my next video, right? So but I'm going to drop my WhatsApp number in the description, but please, not the comment section, don't get scammed, in the description box. So do it to reach out to me and we'll get started. See you in my next trade. Bye.